Alright, it is James, the Blue-Haired Investor, and I've got some updates for you on the market and just some things in general. Number one, this is not, we're going to be going over a variety of things, but this is not financial advice. I'm just a blue-haired investor who wants to be in a position financially where he can just retire if he wants to and work if he wants to. Always want, I like you always want my net worth to go up, but, I want the freedom to say, you don't have to go 9 to 5. Type thing. So, and excuse me for the stumbles, I'm still recovering from the, we'll say the 2020 flu, and we'll go from there. I'm pretty much over it, but, one of the things I'm finding is that when I work out, when I go to the gym, the next day I feel like trash. And that happened the first time I got it for like a month afterwards. I was hoping it would not for this time, but, we will see. So, what is happening in the oil markets, right? Well, there's a lot of turbulence, and this picture right here shows it perfectly, right? On the top, if you're just listening to this, is Citi warns. Let's see here. The date is July 1st, and it says J.P. Morgan Chase sees catastrophic or stratospheric $380 oil on worst case Russian cut, right? $380 a barrel for oil. And this was July 1st of 2022, right? And this is Bloomberg. July 5th of 2022, Bloomberg publishes something that says Citi warns oil may collapse to $65 by the end of the year on recession. So you've got, this is right before the 4th of July holiday and right after the 4th of July holiday type thing. So what is happening in this? What's causing this? And what's causing this is just market turbulence. This is brought on by traders and fears, right? A lot of this is not FOMO, but what was the term? FUD, fear, uncertainty, doubt, right? A lot of people think that we're headed into a recession. I talk to people about, hey, when the billionaires say it, it's probably going to happen, listen to them, especially when a variety of billionaires say it. I'm on that boat. I think we're going to head towards the recession. I think the Fed, as they start to pull back, they start to tighten up, things are going to get a lot worse, and we don't know when the camel's going to break type thing. My guess is it is not going to be this summer. I'm thinking this summer is going to be smooth sailing, but it's going to be very telling around September or October as the start point, right? But I think sometime next year we're going to be in a recession and things are going to start to get really hard. And that's good, in a sense, for us investors because that's when things start to go on sale, right? And we start to buy things and it's going to be amazing for us long term, right? And a little tip that what I'm doing is I think there's a lot of smart money in the sidelines right now. And typically when a recession hits type thing, what happens is people and prices for assets go down, people jump in with that money on the sideline, right? And then what happens is they'll flatline and people will keep piling in, and then it goes down again. And then and it might do this 2 to 3, maybe 5 times, who knows, right? But the key to it is when it first starts to flatline and people are jumping in type thing because, hey, houses are at a discount, I'm going to pull back a little bit and say, let's just see, and I'm going to let my competition spend all their cash when we've got 2 to 3 more bumps down, right? There will be a time where I have to start buying, and I may buy a house, at that time, and it goes down, $10,000 or something like that, and I'm going to be okay with that because it just came down 50 or 60,000 or 100 or something like that, right? Because I've got some lofty goals. I want to get 100 single-family units, 4 multifamily, plus probably start buying some businesses and some commercial real estate as well. So I've got some pretty lofty goals out there, right? And here's the thing, the average recession lasts about 2 years, give or take, right? Depending on when you count the swing down and when you credit the swing up. But at the bottom of that punch bowl, right, when it kind of swings down and starts to come up, that's when you want that bottom 10 to 30%, that's when you want to start buying. Because I don't know about you, but I don't have the bandwidth to buy 100 houses in 12 months. Okay, if you're counting all the holidays like Christmas and Easter, Thanksgiving, all that stuff, that's like 10 houses a month, which I could, but man, I wouldn't go on vacation. You know, I don't know actually if I could. I could definitely buy 2 to 4 houses a month. That's pretty doable. But 10 good deals a month with all the marketing and everything, all the costs that go into it, and then having to get loans and stuff, that's just a lot, right? So my point is this: is that you know, as it goes down, I wouldn't jump in to buy, right? Wait for it to kind of level off a little bit, and then start the buying process. I know that it's going to take, you know, you should be buying, you know, straight for the next 12 to 18 months easily, and then especially when it starts to go up, you know. So anyway, let's get back to oil. That's just my little tidbit on my investing strategy. But again, not financial advice, just my thoughts on what I'm going to do type thing. But right now, oil is... It's just going to go up and down with whatever news comes out, right? So let's go over some of that news. All right. Actually, let's take a look at, here's the prices. So here's, you know, in the last week, oil was at $102. It jumped down to $93. And now today, it's back up to $102. You know, I mean, it was last weekend. Let's see, it's the 18th on Monday. I mean, on the 14th, not counting the weekend, so 2 days prior, it was 93. So it jumped up $10 in effectively about 2 business days, right? Maybe 3, depends how you count it. If we look at the monthly chart, up to, so 110, I got higher than that in the last month, but it might have only been there for a short time, right? But we'll just count it for that. So June 28th is 111, and 20 days later, right now, it is sitting around 101, 102, give or take, right? And it's kind of gone up and down, bumpy, stuff like that. Look at the year chart, and it's just hovering on this zone. Not really, it's kind of bouncing off 95, give or take, and really bouncing down from 120. There we go. It's June 9th, excuse me, 121 type thing. So it will probably bounce up and down that range depending on news, right? My thoughts are it's going to keep going. By the end of the month, it is probably going to be maybe 110 to 120, give or take, because it is. I'm in Texas right now. It is hot as anything. It's averaging between, let's say a light day is 98 degrees. Okay, we're hitting around 105. It is one of the hottest summers that I've been through. So everybody's got their AC on. Everybody's, you know, cranking it up type thing, using a ton of energy. And so these prices, they're going to go up. Let's see next time. So the short term is going to go up and down depending on the news, right? Mid to long term, everything people are saying is oil is going to fly up. Oil, in fact, 2023, there's a lot of people predicting it's going to be one of the best years for oil, that they've ever seen. Type thing. My guess is probably hit around 150 or something like that, and that's when it will break the economy, and we will definitely be in a recession, right? And so right now, I think the smart thing is to do is if you're interested in investing in oil and gas, start to what I call plant seeds in investing. Start to buy mineral rights. If you are interested in it type thing, you could do drilling, although that has some risks associated with it. Mineral rights don't have really any risks type thing. They're like one of the most risk-free, work-free assets you could do, even better than rental homes. You could, if you're good at stocks, you can do that. But one of the things I don't like about stocks, even though I do buy them from time to time, is that if you buy at a certain price, let's say you bought, let's go to the one here. Let's say you bought when oil was here, and it was doing good, it's kind of going up, and then all of a sudden it just cracked down, right? Well, you might get scared and sell it down here, but you got to hold it for another, month or so, 2-3 months before it piles back up, right? So the best thing to do is kind of, once it hits that that $96 or under $100 type thing, maybe consider buying some. Again, not financial advice type thing, but this is what I wish I would have done. And then sell it at before it hits 120, and just let it bounce back and forth and just keep profits. But let's see here. So oil and gas is going to go up because here's the thing: the news is going to come out and push it up and down. Whatever's going on today. In fact, the reason why it came up $10 today, or like within a few business days, is because Biden came to Saudi right here. Biden's trip to Saudi Arabia this week, it did not go as well as he planned it did. So right here, Reuters says Biden came to Saudi Arabia hoping to reach a deal on oil production to help drive down gasoline prices that are driving inflation above 40-year highs and threatening his approval ratings. He leaves the region empty-handed, but hoping OPEC Plus group compromising Saudi Arabia, Russia, and other producers will boost production in the meeting August 3rd. He is hoping that they will. Right now, OPEC and Saudi Arabia and Russia, they know they were making a ton. They're making a killing right now, and know if they raise production, what's going to happen is it's going to lower their the price on oil, right? So why would they want to do that? There's no real motivation in that for them. But Biden is hoping to. So this was a big, I'll say it, slap against the face for Biden. Right, and I don't want to get political in this, but oil is very political, right? Even on, where does it say? So, even here it says, breaking news: oil $100 plus is back on for the long haul. So, there's all this news that's coming out, but short term, it's going to go up and down. Prices are going to go up and down based on what the news is, right? Again, I'm not thinking oil is going to get under $90 a barrel until there's a huge driver on demand. A huge demand destruction for oil and gas, and plus with a huge matter of fear and FOMO. Not FOMO, but fear and FUD, fear, uncertainty, and doubt on what's going to happen in the market. Then I think it could drive oil down a bit. And I don't think it's going to be until possibly the end of 2023. We'll see what happens, type thing. I think it might happen in 2024. To be honest with you, I think oil is going to go north. It's going to hover around 120. It's probably going to hit that up, and then eventually it will break it. My thoughts are we're going to see once oil passes 125 and stays there steadily. We're going to see what's going to happen. In my mind, 125, it's kind of like when you're driving a car. 125 is where you start to redline, okay, for the economy. It says, okay, it's just the start of the red line. We're not really in any danger, but this could break the engine, right, if we just hold it here for too long. Oil gets to 150, that's definitely in the middle of the red line for me. That's when it's like, okay, really pay attention to this stuff. We're going to see what's happening. And then 180 plus, that will break an economy, in my opinion. Again, these are my guesses. I don't have a crystal ball. I'm just kind of reading the tea leaves the best I can. So, with that said, long-term oil prices are going to go up and be very, very high because the fundamentals are there. The U.S. we consume like 20 million barrels a day. I think it's 19 plus, and it's going up. But we're only producing about 11 or 12 million barrels a day, right? So we have we need 8 million barrels of oil per day to keep doing what we're doing. We have to bring that from somewhere else, right? And if you listen to some other videos, the world is going to go through an energy crunch because no one is putting financial infrastructure behind it. No one is building out refineries. No one's building out platforms to go and to get the oil, right? All of that is being crushed either financially or socially, or kind of a mixture of both through the green energy movement, right? So energy prices are just going to go up, and we're going to see them go up. I mean, you mark my words. I'll put money on this, but I am putting money on this because I'm heavily invested in oil, right? And I think it's going to be one of those things that's really going to shine. But let's talk about gas as well, and let's talk about what it means for all these things. So this is one of my favorite websites for oil, oilprice.com. It just makes it easy for me to look at stuff, type thing. So, and by gas, I mean natural gas. Now, you look at it, it's red. It went down 0.64%, or just under 5 cents, right? But today, it ramped up. It went up a huge amount. It went up, let's see here, 15th. Yeah, between the 15th and today, at the 15th, it was $6.50 per cubic, whatever. I forget the actual measurement they used, and now it's just shy of $7.50. So we're about $1. That's a huge amount. That is a huge amount, and this is why. So I'm not sure if you've heard of this happening, but Germany, which is the biggest and best economy in the Eurozone, they are really doubling down on their green energy movement, right? And your energy, especially if you're in America, like 80% of it, give or take, some areas probably 60 or 70% of it is harnessed by natural gas, right? In other words, they burn natural gas so you can keep the lights on at home, right? So you can cook your food, so you can watch your Netflix and everything else. So if you're going to shut down gas and petroleum products, you're going to shut down coal, and you're going to shut down your nuclear plants, you're going to become heavily dependent on some sources of energy, right? Right now, that's natural gas for Germany. They don't have enough wind and solar and everything to really power themselves, right? And they have been getting this natural gas from Russia, right? Because about 80% of Russia's they say 60, but reality is probably about 80% of Russia's GDP, their gross domestic product, is from their oil and gas exports. They are huge into oil and gas. They're kind of like the Saudi Arabia of the frozen north of the world, But they are huge on that. And Europe is a very, very large consumer of theirs. And so we all know that the war with Russia and Ukraine is going on, which I'm not really sure how long it has. My guess is it's past its halfway point type thing. Something's going to happen to where it comes to an end here, I'm guessing pretty soon, but we're going to see. But whenever you're pumping either oil and gas or LNG, liquefied natural gas, where you take the natural gas, you compress it so much, put it under so much pressure, it becomes a liquid, and you just run it through a pipe. And it's like, oh, that's kind of like water now, except for don't smoke around it, right? When you do that, you create pipelines, and it just gets there so much fast and efficiently, right? Well, these pipelines have to undergo maintenance, and this is quite normal, right? Maintenance is quite normal for these things, and wanted, because you don't want it to bust and be like, whoops, type thing. Now we have to fix it, and now we have rolling blackouts because we don't have enough, right? So Nord Stream 1 is one of those maintenance things. So that's the pipeline that goes from Russia to Germany and other Eurozone countries. It is undergoing maintenance right now. Started July 11th, last Monday, and it's going to end on the 21st, predicted to end on the 21st. Russia is in a conflict with Ukraine, and Germany is saying, hey, we're on Ukraine's side, we don't like that you invaded Ukraine, and so we're going to push back on you politically for that, right? And they haven't stopped. And so what people are scared of, right? I mean, this is a headline in Reuters right now. Europe on the edge of Nord Stream Russia gas link under shutdown. They don't know. People are scared that, hey, Russia may not turn this pipeline back on. In other words, maintenance may keep going on for like a month, right? Or when they turn it back on, or it could be going for a month, or it could go on indefinitely, right? Oh, it's just continual maintenance, right? Or it could turn back on, but now there's only half the natural gas coming, Kind of a sneakier way to do it, right? As in, we turned it back on, everything's good, but only half of it's flowing, we're just trying to figure out that problem with this, Germany, As you kind of nod to them and say, hey, leave us alone in this war type thing, if you're playing the Russian, or if you're playing Kremlin, I should say. That may happen, and if that happens, Germany's going to be in a heap load of trouble, because they are the largest producing. They have the top GDP in the Eurozone, right? In all of Europe, Germany produces the most of any country. And I'll say it, as far as the euro is concerned, Germany is what's keeping the euro afloat. Okay, there are other countries are putting a little bit into, but when it comes to the gold medal for it, Germany's, without a doubt, Germany's right there. Right, they actually have a huge manufacturing and distribution in Germany, and that is really what keeps Europe afloat. I don't know any current business that I can think of that can do the same amount of production as it did yesterday, as it did before, if it doesn't have any energy, any electricity, right? I don't know what. So if Germany gets shut down, if the pipeline doesn't come back up, that's going to hit their GDP really hard. Like they're going to have rolling blackouts. Their businesses are not going to be able to produce, and their economy is going to tank. And the economy, most likely of all of Europe, will feel ripple effects and start to tank as well, especially as we go into an era of high prices and the uncertainty for a worldwide recession, right? So this is kind of a scary thing that is pushing oil and gas prices up, right? This is going to be on the gas side. So wanted to keep you in the know of that. If you're investing with me in oil and gas type thing, the two are combined. And so, when they pull oil out of the ground, they're going to pull gas out too, so we get paid on both. So this, I hate that this is happening to Germany. I don't want it to, but it does help us on the global market, and this is why it shot prices up $1 per cubic meter. Excuse me. So that's what's happening with oil and gas prices right now. What is this going to mean? And I'm going to take a step back from oil and gas and just say, what is this going to mean for the world, right? What is this going to mean for food? What's it going to mean for businesses? What's it going to mean for the average person? Well, I think everybody's going to get pinched. In 2020, things were shut down. We all felt the supply lines get hit, right? And there was a shock to the system. And some of those have healed over, most have not due to government intervention, or let's just say government not stopping their intervention. And I think in this next year or two, we're going to see it really hit, we've already seen it hit, inflation hit food, right? I think it's going to hit it even harder in this next year. And this is why, because food, just like humans, right, we beget other humans, which beget other humans. In other words, I've got parents who had me to carry on things, and then I'm going to have, hopefully one of these days I'll have kids, but if not, my brother's definitely making up with his 6, right? You're going to have kids to move it down. In the same way, farmers and ranchers need livestock. They need plants to plant for more plants down the line, right? If we have a shortage or a point to where we have to cut those lines off, it's going to take longer to rebuild, right? And that means prices are going to go up. So in other words, let's just say you had a population, let's just say you owned it, you were the president of a country, right? And that country, you had 100 million people, and they were having 2 babies per marriage on average. So in other words, your population was going to be flat, right? For every one person that was born, one person died. Okay, we're going to keep the numbers simple. Let's make this simple. Let's say in 2020, half your population died, right, of the country that you were in. Okay, sad, but just roll with me on this. That means you now have 50,000 people, okay? Those 50,000 people, to catch up to what it had, now have to have 4 babies. Those couples have to have 4 babies as opposed to 2. See how the math works on that? And when we put it in an example like that, it kind of becomes real. We say, oh my gosh, yeah, I don't want 4 kids right now. So in other words, for ranchers, if they've got 1,000 head of cattle, okay, and they need they're going to use 500. 500 are going to go just get slaughtered every year. That's fine, you know. And then they've got 500 that are making 4 cows per year, right, or calves per year. So they'll replace themselves and they'll be up after excuse me. They make, let's just only example, they make 2 cows per year, right? So in other words, they replace the cows that are sold for meat, and they replace the cows that are there to reproduce and make more cows. Let's just say they have to sell again 50% of their cows, but now they have to sell up to 90% of their cows, right? Especially because right now Texas and the South are going through a huge drought. Okay, and I don't know if you've heard, but people are lining up to auction off their cows for meat. Why is this? Because 2 things. 1, it's going to be hard to keep them hydrated. Number 2, it's going to be hard to give them something to eat, because the grass that's just going from the ground isn't growing at 105 degrees. It's burning. Okay, it is crispy, and cows aren't going to eat that. And so they either have to put a ton of water on just their their 100 acres, right? Or they've got to buy barrels of a bunch of barrels of hay, which the price of has like quadrupled on them for that, right? It's not really what you want. Or they can sell the cows, right? In other words, it's kind of like, let's say you own 5 rental homes, and there's no tenants in the town anymore. Are you going to just keep paying the mortgage and just hold it, or why don't you just sell it, right? You're just going to sell it. Hey, go buy rental homes again in the future when there's tenants in the town, right? Same thing like that. So instead of taking a hit, they're just going to sell their cows. So right now is a really good time to buy beef. And if you're in Texas and really anywhere, beef prices for the summer will go down, it seems. Now, what's going to happen next year? What's going to happen maybe in the fall or around Christmas time for prices of beef? They're going to go up because there are less cows to reproduce, right? Let's just say all the cows, we have 1 million cows in Texas, and typically we've got 300,000 that go to the market per year, and the rest produce other cows or milk or something like that. Well, what happens if ranchers as a conglomerate sell 700, right? There's only like 300 left, and they've got to work to produce more, but you can't produce, you only produce 1 cow at a time type thing, or, it's like, with humans, if you tell people, well, hey, you need to double, you need to have 3 babies this year. It's like, well, that's kind of hard. That's going to be really hard on my wife, 1 is hard enough, if you're saying 3, this is undoable type thing. That's the constraint, sorry. In fact, that's the perfect example. It's kind of like what we're doing is to get us back up to where we need to be next year for prices for beef and such like that. Every woman is going to have 3 babies this year, and it's just not going to work. 2 1/4 is probably the best they're going to get, right? Maybe if not just 1, but that's where we're at. And the same thing is going on with wheat and corn and everything else, right? There has been a slack in the production line. People are selling off because they can't. They're selling off their assets in these. Either it'll be cow or fields, or not growing as much, or they can't grow as much because the fertilizer has gone up 10 times. And so that will cause a greater shortage in the future because you have less to produce with, right? And so, what does this mean with oil and gas and with all of these things? I think the average person is going to get hit really hard. Like you and me, if you're listening to this, you're probably not the average person. Okay, I think the average person is going to get really hard. They're going to hit hard at the pump. They're going to get hit hard at the supermarket, right? And it will crack. A lot of them are not going to see this coming because they're just not in the know. Or when they see it coming, it's going to be too late, right? They don't have enough disposable income to make it up. And when the prices go that high to where it eats up more of their disposable income, and they don't start to dump things like that Corvette that gets 12 miles to the gallon or something like that, or those weekend trips that they always go to this or something like that. or that huge house that they've got 3 extra bedrooms that they don't use, and it's a huge energy bill and a huge mortgage or something like that. They don't really want to dump these things. They want to hold on to them as long as they can. And I think it's going to come to a point to where it's just they're going to crack, right? And they're going to pull back their spending. They're going to start selling things off. There's going to be that iconic straw that breaks the camel's back at some time, and then that's when things will just hit the fan. So I think right now, here's some what I'm looking at when I'm thinking are great investment ideas in my mind, not financial advice, right? Are going to be oil and gas. Again, just putting seeds in the future for now, like buying oil and gas commodities, ways of production, mineral rights, stuff like that right now. Getting them gleaned and just start making some income on them now, and then especially in 2023, it's going to just fly. I think it's going to fly through, and there's going to be a lot of good income to be had. I think food is a good investment right now. You can look at wheat, you can look at cattle, you can look at corn, those things. If you're playing stocks, not financial advice again, WEAT is the ticker symbol for wheat. A lot of people think because of the war with Russia that Ukraine has not been able to plant. Well, they haven't. They haven't put a lot of energy into planting for this next year because they've been at war, right? And some of those fields have been destroyed. Some of them just haven't been planted because they're fighting, right? Or they took their families. They're civilian. They took their families and they went to Poland or Germany or somewhere else to be safe, But bottom line is the wheat wasn't planted. And if I remember my statistics right, Ukraine gives about 12% of the world's calories through what they produce agriculturally. I'll say that again, 12% of the world's calories through what they produce agriculturally. And a lot of that is wheat. In fact, the Ukrainian flag is and let's see here, wheat and sky, yeah. The Ukrainian flag, the best way to remember it, and if you're watching the video, you'll see it clearly, is it's blue on top, yellow on bottom, right? Because that is what it looks like as you look over a field of ripe wheat into the beautiful blue sky. And the pictures online are gorgeous, really, they really are. But that is what Ukraine is all about. And so a lot of people think wheat is going to go up. Right now, wheat, as far as the stock, is actually down pretty far, in my opinion, right? I think it's going to, if you look at the year, it had some bumps, but it's kind of coming down to its summertime low, as it typically is. But come the fall, and when there's not a bunch of yield, it's going to start to fly up like really, really, really high type thing. And so buy it now, hold some now. It's $8.36 today. It's not a huge amount type thing, but I think wheat is a good one. I think cattle are going to be a good one, especially with the shortages that will come in the future. So these are just some ideas, not financial advice, but these are things that I'm looking to invest in as well. Again, oil and gas is definitely the main one. If you have questions or you want to if you're looking for some avenues on how to invest in oil and gas, I have some. If you'd like, give me an email at james@jthbuyer.com. Again, james@jthbuyer.com. Shoot me an email with your contact info. We can definitely talk, and we will go from there. If you like this, put some questions down below. Like and subscribe, because I'm here to help you out. I hope this update has helped you in the oil and gas, just energy in general, giving you some things to think about. And again, I am hopefully going to be back 100% myself in the next week or so. We will see what happens. But until then, I wish you guys have a great week. Enjoy your summer. And I'm going to go crank my AC down because it is hot in Texas right now.